As I say, investors are in the same bailiwick as CEOs. I mean, you see the head of Intel saying, we've got to rework our supply chain. How much of this is overall demand that you can't work around, as opposed to we have to reroute some things?
Well, I think it's a combination of both. And I think what's interesting is, you look over the past year and a half, the market has really zigzagged up and down. And a lot of that zigging and zagging has been determined by what's going on with the trade war. And the trade war with China, I think semis are the purest play on that. So the angst you're seeing in the semi space right now, the fact, I give these CEOs a lot of credit. I mean, they are being pretty honest with the street, telling them exactly what pitfalls are coming up, exactly what they have to do. There's as much of a cloud of uncertainty over them as there is over investors, but it's really just capping the upside here. It's really, really difficult to break out unless you know which way this is going to go.
Well, here's my concern is that when we saw what happened to Broadcom last week, it made me think that actually a G20 where nothing happens or where they don't actually meet, which is kind of where the White House is setting up investors to be braced for, is totally not priced.
Right. No, I think that's fair. I mean, I saw some comments over the weekend saying don't expect much from these meetings coming out of the White House. It does seem like they're trying to tamp down expectations. Who knows what that's going to beget, right? Are they tamping them down so they can build them back up later? Are they honestly telling us not to get our hopes up at this point?
And to what extent, and we're anticipating the Fed later this week, does it actually encourage the president? Because if we've got a looser monetary policy, he feels enabled.
I mean, he can think that and he can hope that. I'll tell you, I still sit in the camp of I don't think the Fed moves until they see actual degradation and damage to the economy. I don't think just slowing growth is going to be enough to get them to move.
So this is a great binary sort of outlook from Bank of America. Yeah. It's like the different deals. Like, okay, you had no deal at G20, but then you get a hawkish Fed versus a dovish Fed. Do you feel like we're in a binary world?
I absolutely do, and I think that's why the market is not really doing anything. I mean, we're sort of hovering right below all-time highs. We kind of had like that 5-6% break, then we popped back up. I think investors, at least the ones I talk to, are trying to figure out what the heck to do. And I applaud them because they're not overreacting, they're not panicking, but they are waiting for this news flow.
That sounds defensive to me. Is that where you are?
Well, we've been telling people to buy consumer staple stocks, and I'll tell you that I am actually really excited that the Mexican tariffs seem to be off the table because that was one of the big risks to our view there, but I really don't think they're that at risk from China. I don't think they're at risk from other political pressures down the road. And we've also been telling people buy utility stocks. We understand people have valuation concerns there, but they're below peak levels relative to the S&P, so there is still room for them to run. And when we go through all the policy risks out there in the market, they just aren't caught up in them.
Well, that's a great point, though, because at what point does the risk reward change for that? When valuations get high enough where, okay, their profits and earnings might still be really good and they're defensive, but they're just too expensive.
You do often see at, sort of big inflections of the market when you've gone down too much that the defensives rather just seem too expensive to buy and the cyclicals are just too cheap to pass up. And we're not close to that yet.